Now, Wall Street appears to be heading for its first winning week of 2025 after the U.S. central bank suggested there could be 3 or 4 rate cuts this year. And starting Monday, the U.S. will be led by a new administration under Donald Trump. How might that affect the markets? Let's check in with Benjamin Klein, Senior Portfolio Manager at Baskin Wealth Management. He's here in the studio. Good to see you, sir.
Thank you for having me.
Barry Schwartz was here as well. It's Baskin Day at BNN. How about that?
Lucky for your viewers.
I know, absolutely. All right. First off, how do you and how does the team at Baskin? What's your criteria when you're looking for stocks?
So, especially in a time like this, there's a lot of variability. Not least of which is the new coming administration. We kind of go back to basics. We say we want to own, as we always do, great quality companies that make products that people want and people need. And maybe most importantly, at a time like this, we put an emphasis on strong management. Management that we know in the past has made the right decisions in all kinds of different economic environments, different political environments, different interest rate environments. And we want to know that when we go into a company, when we're long-term investors, we expect to own it for 5, 10, even 20 years. And by definition, you're going to own it through different environments. You're going to own it through different presidencies and everything you can think of. So we want a company where we can have confidence that the management is going to do a good job, understand what the different pressures and things to focus are on. So for us, it's really back to basics.
And when you're doing this, what kind of tailwinds are you looking for in various sectors? And also, second part of that question is, why are you focusing on the U.S. and international primarily?
So, obviously we think the U.S. economy is in better shape than Canada's, and we think that's a trend that's going to continue at least for the next little while. Although I should say we don't think Canada's quite as dreary as everybody seems to think it is. At the same time, I think the U.S. economy is in very good shape in terms of prognosticating of what's going to happen on Monday and over the next 4 years. Really, nobody knows. But our view is probably more likely it ends up more positive for the U.S. than it is for Canada. So we're pretty happy we're more heavily weighted into the U.S. and international than Canada, and we expect that to continue. In terms of tailwinds, we want to make sure that when we're going into a company, number one, we kind of start from the bottom, look for tailwinds that should be positive for the company going forward. But at the same time, that company itself should be ideally the best player in its industry, best player in its sector, and be able to benefit from those tailwinds as best as they can.
All right, Ben, you've got 3 names for us here. Watsco is a HVAC company. This stock is up 180% the last 5 years. Just noticing that it's a fair-sized company, $23 billion market cap. So what do you like about it?
We think it's a wonderful company. It's the biggest HVAC provider in the U.S., has exclusive agreements with companies like Carrier. And in general, the big tailwind there for us is HVAC replacement is really not economically sensitive. It's pretty much non-discretionary expense. And one benefit there is as standards become more stringent for things like cooling, for example, this month, a certain refrigerant is being phased out. And not only is that good for buying new units, but it puts more emphasis on replacement of existing units as opposed to repair existing units, which is good for them. And just in terms of management, like I was saying before, they have a great working culture and a good track record of making positive acquisitions.
And then Stryker makes these replacement joints, basically, and it is a real demographic play, wouldn't you say?
Exactly.
Yeah.
So they're the biggest provider of hip and knee replacement and joint replacements. So for them, it's kind of a double demographic play. Now, most healthcare companies, I think the obvious demographic play is aging population and what that means for spending. But for them, it's kind of also more not just aging demographic, but aging demographic that wants to continue to be active longer throughout their lives. That drives more demand for joint replacements. And interestingly, the quality of the replacements themselves, but also the surgery to do the procedure, has driven a lot of growth in the number of patients that are quite a bit younger getting the same procedures. I think since the beginning of the century, the number of patients between 45 and 65 getting a knee hip replacement has grown by 200%. So that's, again, a factor of people becoming more active, wanting to be active for longer. But again, the standard demographic play, as you say.
That's an interesting stat. And the third choice here is Garmin makes those cool gadgets, the watches and the tracking devices. Stock's done very well, up 116% in the last 5 years. Pretty big market cap, too, $41 billion. Give us some of the reasons here.
Yeah. So I think most people know them for watches. I'm actually wearing my running watch right now, which I'm a big fan of. But they also make tracking devices for things like boats and small aircraft. And the interesting thing there for us is, number one, is the the tailwind from people want to spend more time outside, and that's a benefit for spending more money on devices. At the same time, they have shown a very strong track record of innovation. So the obvious competitor there is Apple Watch. In our view, Garmin focuses much more, and their view too, of course, is they focus much more on the enthusiast market. So this is, a fairly entry-level running watch, but they have much more focused watches for specific sports. So they have, solar watches that last basically forever because they can charge from the sun. They have golfing watches that you can download course maps right onto your watch. My sister-in-law, who's a big surfer, has a surfing-specific watch. So they've had a really strong track record of innovating, creating new products and demand, and then also, like the other two, making strong acquisitions and growing that way as well.
All right, very good. Watsco, Stryker, and Garmin. And just quickly here before we wrap it up, and what's Garmin's coolest gadget, do you think?
The one on my watch right now.
Oh, yeah? Yeah, if you show, hold it up.
So you can see
All
it.
right.
It's kind of your standard running watch, but I used to be really into gadgets when I was younger. This is kind of the first one. I've had it for maybe 3 years that really captured me the way it did in my youth.
All right, very good. Well, that's high praise. Thanks, Ben.
Thanks for having me.
Okay, good stuff. Benjamin Klein, Senior Portfolio Manager at Baskin Wealth Management.